Hello and welcome to Your Money, Your Call. I'm Kim Slater from Kimber Capital, and joining me in the studio this evening is Jeremy Hook from TMS Capital and Francesco Destratus from Ord Minnett. If you've got a question about shares, our phone lines are open on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. So welcome to the program. Gentlemen, it was a topsy-turvy day. Banks were diverging in performance when normally they run together like sheep. The rolling sell-offs in resources continued, and this time round it was the gold and energy sectors that copped in the neck. All in all, a pretty weird day. We had the housing starts fall sharply to near 10-year lows, and the Reserve Bank was maintaining its course on interest rates, despite the fact that we had a really solid positive lead from the overnight markets from US and Europe. How the hell did we end up down, where we did today? Jeremy, what was your take on it?
Well, it turned around. We were positive early on in the session, and perhaps that was about the good early lead we had overnight. But I think it was a little macro, Kim. I think the housing starts did affect the market. Remembering the RBA and all the market economists, the whole theory here is that we get some sort of leadership out of the housing sector and new starts particularly that will take over from the declining investment in mining. And if that doesn't happen, there are risks to the economy on the downside. So I think it was a little macro related, probably a bit technical too. 5,000 was flirted with again and they didn't want to stay above it, so it came back down. But we do go into this time of year where we've got less to talk about in terms of the company news, and the market can drift in that environment too.
Well, the Godfather, what did you make of it all?
Well, I think our market's got a bit of a ceiling on at the moment. If you look at the PE across the whole market, we're looking at pretty much fair value, and there's no reason for the stock market to get expensive or get go into that expensive range. So I think every time the market is seeing some good gains, and we're up early in the day, I think there's a fair bit of selling to go on out there. Not enough to push the market back a significant amount, but I just think there's a bit of caution still coming back into the market now. We didn't have any rate cut yesterday. There was a bit of talk about the next move on rates could be up. I don't subscribe to that theory. I think we're still on an easing bias, but things can change over the next 3 to 6 months. I think that the economic news today was quite positive, particularly the trade figures. And what I think we're going to start seeing now is a reduction in imports from reduction in capital expenditure, particularly in the mining sector. Very large expenses in that area, but the shift away from capital expenditure into production should improve our trade figures going into the sort of back half of this year and early next year. So I think things are sailing along fine, but not enough to get the market expensive and overconfident.
Well, look, the elephant in the room today was what was going on in gold, because all of a sudden, we had the gold sector being slaughtered as if the price was trading at $1,400 a tonne, and I guess the litmus or the lightning rod for that was the report from Newcrest last week. Yet another major disappointment to the market, yet another production problem, yet another earnings downgrade. But it seemed like every producer, and I'm not talking about the exploration side of things, but every producer got caught up in that hurly-burly downdraft today. I was looking at Silver Lake Resources trading at $1.90. Troy getting slaughtered. What did why is the sentiment of the market so negative on gold at the moment?
It's a good question. You went looking for stocks today which were down a lot for what's the news driving it.
Correct.
And Newcrest you can get production downgrade on Thursday while the commodity that it produces is falling in price. That makes a lot of sense. But there are a lot of littler ones who are just getting caught up in a torrent of selling, and the answer is it's selling because people realise that it's got long in the tooth the game. The resources rally has been going on for some time. I know the last 6 months has been anything but these cycles are very strong and they're very pronounced when they happen. And right now, the capital is running for the door pretty fast. Now,
well, that's a good point.
I'd say it's been running for the door for a little while.
It certainly has. But the point is, the capital's running for the door, but where's it hiding? It's not. There was a little bit of action there in defensives today. We saw things like, QBE and some of the healthcare stocks up slightly. But where's it going? There's supposed to be these huge amounts of cash that are sitting on the sidelines waiting for an opportunity to get into the market. Yet there doesn't seem to be any evidence of that money transporting itself into the into the key blue chips?
Well, I think it's definitely moving to industrials generally. I mean, the small resources is down 40% from 12 months ago. 40%. That's massive, absolutely massive. And most of that's happened in the last 6 months. While the oil is up 15, and the small ordinaries, the small industrials are up 9%. So they've gone up, not as much, and so it's definitely been a reallocation within the market into industrials. But it has been the leading industrials, not the smaller ones, not yet in any case.
So what's your take on the gold
Well,
price?
I think Newcrest is a bit sneaky getting it out Thursday.
Oh yeah,
before
well,
a good long weekend.
yeah, exactly. Everyone goes away and forgets about it.
Yeah, I suppose you look at Newcrest now and you go back to the acquisition of Lihir Gold, and they're probably looking and saying they bought themselves a lemon. But there's very good resources there. I look at the gold sector and I look at the gold price and what it's been doing. I think people are becoming impatient with it. We've had that run up to, I think it peaked at about $1,900 probably 18 months ago. It's been quite a while. It's been in this consolidation, if you're a chartist, for quite some time. So I think a lot of investors have become impatient with it and thinking, well, if it comes, is there much more in it? I subscribe to the theory that I think there's a bit more in the gold price. If it broke below $1,500, I'd be very, very concerned. But, the mining companies have significantly underperformed the gold price, and I think it's just investors becoming impatient.
Well, so that raises the question, and we'll move on to the next caller in a sec. But are they a value trap, or are they cheap?
Yeah. Well, they've underperformed the gold price, the equities, but the risk is the gold could go back to historic levels, and that could have 1,100 on it or something like that, and it wouldn't. That would be more in line with its longer term uptrend. It's had a few very good years, and so over the last decade it's been a very positive one for gold.
Well, I'm sure we're going to get plenty of calls on this during the program from people wanting to know what the hell's going on, because I was certainly scratching my head today. Our first caller is Mark from Butter, and welcome to the program, Mark.
Evening, Kim. Thanks for taking my call.
Happy to.
That's all right. I'm interested in Worley Parsons. I've had them for a while. I'm up a couple of bucks, and also bought Longy. I'm down a little bit on that. Just wondering what you guys thought of those two, or is it a bit over for them kind of guys too?
Good question. I mean, we've had a few callers in on Boat. I think last time you were on the program, and even last week, it seems that the general consensus about that is it's a bit of a dog. But let's deal firstly with Worley's. Francesco, what do you?
Well, our guys have got to sell on the stock, and have been quite negative for some time. Look, I think it's a reasonably well run business. But ultimately, at these prices, they come under pressure with a number of things. One is that they're paying labour costs, and that's a big part of their business is labour costs. So they're experiencing significant rises in labour costs, and also a lot of the oil and gas companies are now cutting back on a lot of their consultancy. So I think they're feeling it from both sides. We subscribe to the theory that if you're owning the stock and you've picked up a couple extra bucks on it, I think there's better places to be in the market.
A couple of bucks on Worley and down a couple of bucks on Boat. Yeah.
But Boat, on the other hand, look, that's a hard one because it is a good driller. But I think it's probably being underutilised. If you're in the exploration end of the market, you've got to say, well, is the game all over? Is it now about consolidating what's been explored and developing that and getting into production? I think that's the case, but not necessarily as much for Boat Longy.
Well, that sort of leads me to my next question. Are we going to see costs significantly come down? I mean, we're seeing what the economy's doing, and one of the biggest problems that the construction mining industry has had has been labour rates getting out of control. So if we get a bit of a slowdown, that's obviously going to be a pressure point that's going to ease up some of the bottlenecks. And as far as Worley is concerned, that would be a major saver for it, I would have thought.
Look, it is. The only problem, Kim, is it takes a long time to get them back down.
Yeah.
Once wages go and they start moving up, it's a very sticky sort of thing. It's not something you can ratchet down quickly. And even if you restructure and lay off, there are one-off costs that are dealt with as well. So, the thing I would say, and you look at somebody, I reckon somebody like Fortescue's probably managed their environment more proactively than some others in the resource space generally, and is probably a reasonable model by making some asset sales, by reworking their workforce pretty rapidly, and I think you've got to do that. I don't think you get your wages down quickly. They go up, they stay up. You've got to make some severe cuts to get a change on that cost base.
So in a position where you've got Worley and Boat, what do you say?
I wouldn't buy either of them.
Yep.
Yeah, I really wouldn't. I don't think there's a compelling case. I think the earnings story for both
if you're in
under
them,
pressure.
though,
If I'm in them, I would imagine more likely you'd have a decent profit on Worley, and I don't think there's a lot of downside to Boat long year, really. But there's not an investment case to want it. Look, I'd probably exit both of them, and I think you can look at a number of stocks which are doing something quite differently. The headwinds are coming, and they're there at the moment. We haven't heard the earnings news delivery of the bad news that we know is coming, but it surely will come for both of those.
Okay. All right, good advice there. Our next call is Leslie from Sydney. Welcome to the program, Leslie.
Thanks, gentlemen. Thanks for taking my call.
Happy to.
Look, I was wondering about What If. I've got a few shares in What If, and I'm just wondering whether to get out of them or not. I was wondering what the panel thought about them.
Interesting question, because this is one of Michael Heffernan's favourite stocks, and it seems to have a little bit of a volatility attached to it. But for my money, at these sorts of prices, it does look a little bit cheap. What are your thoughts, Jeremy?
I can't argue. I do think it looks cheap. The thing I wonder about is what are the barriers to entry in this space? And I think particularly What If did have a definite leadership or shared leadership in its segment. I wouldn't say it does in 2013. I think some of the big boys have come into this space and have really committed capital. I think What If, I just worry about it. At some stage, we know that what the internet has delivered for certain companies is, a very high margin, high return on equity style of business. And What If has done that in most of the years in the last decade. But I think from this point onwards, it could get harder for them. I think that the competition from some of the bigger boys on the international stage, including our own Webjet, including our own airlines, including a number of people who operate in the travel space, who can actually move in and offer exactly what If do.
So would you move from, say, What If to Seek or something?
Yes, that's what I would do. A lot of people think they're the same. Where Seek's different is it doesn't just have market leadership in Australia and New Zealand and no obvious big competitor, but it's making big gains in overseas markets where they're less mature. And that's why Seek, which some people think are quite similar, it's entirely different to What If, and it's a much better business, and it is one that I would buy, and I do think has got more upside.
Your take on it, big fella?
Look, I agree with him 100% on What If. I think they are coming under competitive pressures. Things like lastminute.com, even I use that sometimes when I'm going to be travelling. So I'd be looking to exit What If. I'd probably lean more towards the likes of Flight Centre from a larger sort of play. I think they're making some good moves into the business side of travel to make up for some of the business they've lost on the retail side of things. And another one, one of our analysts has sort of come up with, which is probably an unknown, is corporate travel management. They're acquiring businesses around the world to try and get corporate travel contracts, not only in Australia but overseas, that people that travel to Australia. And they're making some good moves. The share price has performed extremely well over the last 6 to 12 months, but Nick McGarrigle thinks there's quite a bit more in this stock.
Okay. All right, it's time for a quick break, but before that, though, it's time to start the stock watch. And Francesco, what are you watching? Your time starts right now.
Well, stock we're watching at the moment, when we've just upgraded to a buy, is Tabcorp. Tabcorp in the gaming sector is probably underperformed the rest in the sector. It's trading on a PE that's, in comparison to the others, is quite inexpensive. They do have this licence fee in Victoria that they will challenge in the courts against the Victorian government, and that's about 600 to 900 million that they should receive back. The other thing with Tabcorp is they've come under some competitive pressure with some of the online gaming agencies. We expect that a lot of the
Welcome back to the program. If you've just joined us, Francesco's stock watch was Tabcorp. Unfortunately, you got
got cut off.
The Godfather got cut off at the knees. So with Tabcorp, where's your price target for this stock? What do you reckon it's going to get to?
Oh, look, I tend not to set price targets. I like to see the market move. Where it's going to get to, I'd like to see it at $20, but I don't think that's going to be the case. And look, it's not a short-term buy. It's probably more of a medium-term play. Over the next 12 to 18 months. We were just talking off air about the licence fee down in Victoria.
Yeah.
$600 million, and Jeremy and I agree that it's a bit of a no-brainer. The government wrote the prospectus in it, and they should be handing that fee back to them. So I think that's worth probably about $1 a share or 90 cents a share. So it's quite impressive that they've got up their sleeve, and I think it's at the moment the Tabcorp's price for not receiving that. And the other thing is, if you look at their yield compared to say the comparable, which is Tattersalls, it looks more attractive in that respect as well. The issues that they're coming under is the competitive pressures with a lot of these online betting agencies, and there's a lot of ruckus on about it at the moment with halftime in the footy. Why should they be throwing it down our face? I think politically, whoever's in government over the next 6 to 12 months, something's going to be done about that, and I think some of the competitive pressures might be reduced.
Right, interesting. All right, if you've got a question you'd like answered, give us a call on 1300 30 34 35 or email us at yourmoney@skynews.com and keep those good questions rolling through. Our next caller is Richard from Queensland. Richard, welcome to the program.
Thanks, Kim. I enjoy your show.
Thanks very much for enjoying it. What can we do for you?
I've got a very simple, straightforward question I'd like to ask both members of the panel. Do they see Whitehaven Coal as a buy at today's price? Thanks.
A very good question.
Yeah.
I mean, Whitehaven Coal was it's been absolutely slaughtered. I mean, there is the Nathan Tinkler effect in there as well, but the whole coal sector is getting throttled. So, what are your thoughts? I mean, I'm thinking the knife's still falling on this one.
Yeah, I think so, Kim. Yeah, I'm not Richard buying Whitehaven. I don't think I would in the near term. Kim mentioned the big factors. I mean, number one, what it produces is going down in price. Number two, its costs have risen. Number three, its production is not rising. Then you've got an unstable register. You've just lost the CEO, highly regarded Tony Haggerty, and we really don't have an obvious set of financials to value the company on at anything around the current share price. So valuations against it, an unstable register, management position, and the underlying commodity is not performing well. So I wouldn't be buying it at the moment, Richard.
So it was interesting today because there was that news report out that Rio is looking to flog its Queensland coal assets, including 30% of.
It's hard to get coal exposure in our market these days. It's surprising, isn't it?
Yeah, well,
we're one of the biggest coal producers in the world, and you've got to try and sift through a lot of stuff, and there's nothing there. The other alternative is New Hope Coal or Gujarat, and I don't really have huge opinion.
Two
of
controlled
those.
companies, actually.
Yeah. I mean, New Hope looks good on its land bank and its cash
Yep.
and everything like that. But as far as operations go, hasn't been impressive. So you struggle to look for some sort of coal investment in the Australian market.
Well, the interesting comment from the MD of Rio Australia was saying that a decade ago we could install thermal coal production capacity in Australia around the same cost as any of our competitors.
Yeah.
Today, increased labour, energy and transport costs and an overall decline in productivity mean our costs are 2/3 higher than our rivals.
Ooh.
So you can see, you can sort of see that the margin compression that's happening in the Australian coal industry is probably not dissimilar to what's occurring or what has occurred in the US with the likes of Patriot Coal and that.
No.
Some of those have, I think Patriot, they're in chapter 11.
They are. And that word productivity is the one you hear a couple of business leaders, captains of industry mentioning has been on the way down for some time. You're actually seeing it when you look at companies like Whitehaven.
Yeah.
You're actually seeing it, it's right in front of you.
It's also the red tape they've got to go through
That's
as
it.
well, the increased red tape with, the environmental factors. I mean, you've got to control that, but
It's sort of big as the question, is something like Whitehaven, going to potentially fall over? The reasons that you're pointing out, it's lost its management, its margins are being squeezed. where's it going to go to?
Look, I mean, management's a problem you can fix. You need to get somebody as good as Tony Hegarty, hard to find in the industry. That's something that won't happen immediately, but there are good people that can manage it. It's going to come back to somebody taking a bit of an aggressive approach on costs. I think that's how you've got to deal with it.
Because the resources there.
There's plenty there.
But then the price. The question is, what price do they pay for it? And it's is that $1.50? Is that $2? I mean, where's the line in the sand where somebody puts their hand up and says, "Hey, that's a great buy. I'll take it."
Well, I think the point is that these kinds of companies and the industries they're in can go into bear markets for many years, but they're cyclical and they do come back. And those assets, if you don't pay too much for them and you don't have debt against them, will return well in time.
Well, what sort of reception do you think that Rio's going to get trying to sell 30% of coal and allied?
Well, I just wonder who the buyer is. I mean, it could,
if it's a trade buyer, it might be.
I think that China buying our coal and a lot of our mineral assets has probably moved on. I think that's where all the sales have been over the last 5-10 years, and that's really dried up. And M&A activity across the board slowed. Resource activity has ground to a halt. And Chinese interest is because sometimes they haven't got everything they wanted. And what they did inherit in a lot of cases, and you look at Yanzhou, buying Gloucester, all that sort of stuff, you're getting a heavy cost base. And it's not what you get in West Africa, it's not what you get in Mongolia. You're getting a pretty expensive cost of production here. And I don't think a lot of the Chinese money that came to Australia was quite expecting that. So it's a sense of disappointment.
Mate, you might get a surprise when you walk into the office tomorrow to find you've got the mandate for selling 30% of coal and allied.
That'll be nice to get a clip.
Good luck with that one.
Yeah.
Okay, our next caller is Emily from Melbourne. Welcome to the program, Emily.
Oh, thank you. I was just wanting the panel's views on Orica. I recently bought in at $25.50 and just wanting to know what they think about that.
Okay, Orica. Interesting one.
About $23.50 now,
it's down a couple of bucks from there, and you can see that it's pulled well back from the highs that are established at 27. But there seems to be, around that $23, $24 level when you go back across the chart. There's some pretty decent buying support there.
Yeah, look.
What do the fundamentals look like to you?
12.4 times earnings, a yield which is about 3.5% partially franked, and can rise. It was in the press today. Ian Smith, who was formerly of Newcrest, has taken the reins, and he was heralded in his days at Newcrest, but the legacy hasn't been so wonderful.
No.
But Orica's, I think the case is that most analysts value it around 27. That's consensus target. I value it more around 25. These prices are a little on the cheap side, Emily. I don't think it's going to have a phenomenal run, though. That's my own feeling. The reason is I think margins are contracting, and there is competition coming in the explosives market from China. And I think these things are things that the management is working hard to address, and I give credit there, but I don't think it's an easy place. So it otherwise should be trading higher, and I think it's an unusual stock to be trading where it is at the moment.
We've had some of those operational shutdowns as well, which is going to impact upon the share price in the short term. So
and they haven't necessarily addressed them that well. Kooragang Island hasn't been done that well. The chemical leaks there.
So Emily's long at 25.50. Yeah. Stocks at 23.50, 24. What does she do?
I think she'll get back to square. I think it'll be there. I think 25.50 is achievable. I just don't think it's going to grow again. Let's not forget though, it did have a private equity bid at $32 about 4 years ago. So somebody did think it was worth more, and they might again. I just think without that, and I don't think it's coming, a private equity bid, it'll hover more around 25, 26.
What do you
The other thing to add to that, just on the explosive sector in mining, I mean, you've got to start looking at mining services that are supporting the production rather than supporting the construction. And I think that's sitting in that sort of place. So I think that's okay in that respect. I think it's more to do with some of the operational issues. And look, I think it's probably worth holding on to at the moment.
What would your price target be on the stock?
Well, I'm not a fan of price targets, but I just had a look. Our guy's got a 27.50 on it.
So-
you know, a lot of the time I don't know where they plucked
That's
them from. You know,
consensus.
it's consensus.
He just borrowed it from somebody else.
No, we know,
Exactly.
we know where they pluck them from.
Look, you know, trading on a multiple of, what is it, 12.4 today or around there. So I think it's a reasonable value.
Yep.
You know,
Say that.
for a company. You know, it's not going to shoot the lights out though. You know, I wouldn't expect it for a short-term trade.
Emily, there's some good advice. It looks like it's going to be a solid performer, but if you do happen to see $26 or $27 there, perhaps it'll be time to exit the stock. Okay, our next call is from Wollongong. Welcome to the program, Derek.
Hey, how you going, guys?
Going well. What can we do for you, mate?
Invacare.
Invacare.
Yeah, I bought it at $8.79.
Yep.
And your opinion on it? And if you got time, Melbourne IT, who have paid their dividend, and there could be a special dividend due to a sale of their sector.
Okay. All right. Well, let's deal with first of all with Melbourne IT. Who wants to take the handball on that one?
Yeah, Melbourne IT. So was obviously
Consulting service, aren't they? Yeah.
Consulting service. I mean, the web registration business is, you know, I guess what it used to be. But consulting, yes, it is cash rich, good balance sheet, not a lot of growth though. This is the thing. So the dividends that it pays are pretty handy. But I wouldn't buy that. I would buy Invacare. I know Derek said he's got it. I continue to believe that is an excellent business. That is now trading on, compared to say Oracle, we just talked about, double its PE, 25 times. And so in a pure sense, somebody might say it's expensive. I don't believe it is.
You're paying for growth,
You're
aren't
paying
you?
for growth. You're paying for the quality of earnings, and you're paying for a business which is hard to replicate. So the funeral services, the crematoria, the funds management business, it's quite a special group, and it's one of those companies that doesn't belong in any box. It's a services business, and we still like Invacare.
Some might say it's non-discretionary consumer.
You would think so. You would think so.
Yeah, look, I think it's a great business as well. It's had some good growth. And look, you know, it's, you know, people eventually, you know, pass away. So, you know, it's you know, there's a captured market there. They're expanding into New Zealand. There's a lot of barriers to entry. There's a lot of small operators out there that don't have, you know, succession planning. You know, the young, you know, son or daughter don't want to take over the funeral business because they've gone to university and done something else. So, you know, they're picking up some of these businesses, their family businesses, on pretty good multiples. So I think it's a good one. Just back to Melbourne IT.
I was going to ask you.
Yeah, look, I'd have to have another closer look at it, but I think, you know, if they lose one or two big clients, then, you know, you look at their earnings decline, and so I'd just be concerned about, you know, having, you know, a concentration of large clients that, you know, if you lose one, then, you know, your earnings are going to decline quite rapidly.
Just quickly on Invacare, I know that he doesn't have price targets, but I mean,
we've
you're
got
a much more rational man. You're in the stock at under $9.
Yep.
You know, when do you ring the bell to get out of it?
Yeah, good question. That is, and I think one buying it now wouldn't expect great short-term upside necessarily. So I'd be looking at about $12 valuation at the moment, but I expect, you know, if we had the same conversation in a year, I wouldn't be talking about 12. I'd be saying it's, you know, probably worth $12.80, or, you know, and this is the reality.
12-ish.
It's a moving target.
It'll get bigger, better, stronger. It'll do a couple of things that, you know, it'll make it worth more, and that's the thing. So
You've got to remember their acquisitions. They're generally doing them at a very low PE, so there's a lot of earnings accretion in those acquisitions they make.
Well,
So,
exactly. If you can buy something if we can buy something for 5 or 6 times in the market, and the market's paying 25 times.
that's it.
you get it cheap.
It's a value creation. Yeah.
Exactly. All right, we'll have to leave it there for a moment while we take a short break, but we'll be back with more. If you'd like to speak with our expert panel, give us a call on 1300 30 34 35 or email us at yourmoney@skynews.com.au. Welcome back to the program. Joining me in the studio tonight is Jeremy Hook from TMS Capital and Francesco Destratus from Ordman Net. If you've got a question you'd like answered, give us a call on 1300 30 34 35 or email us at yourmoney@skynews.com.au. So keep the good questions rolling in. There's been some good quality ones tonight. Our next call is from Brisbane. Ben, welcome to the program.
Thanks, Kim. Just a question for Francesco. I know he's across Prima Biomed. Just wanted to see if he's still fairly positive on them at the moment. Ian Fraser, as you know, is stepping down shortly, and capital raising at 10 cents and the shares are at 9. So I'm just sort of wondering how he's feeling about them at the moment still.
It's a bit of a big ask in this market.
Yeah, look, feeling wise, I'm not feeling that great about it. I'm still holding the stock, but look, I still like the long-term prospects of Prima Biomed. Do you buy the, take up the capital raising at 10 cents? Well, if you're going to do that, you might as well buy them in the market at 9. The reason why they're raising money is they want to expand the process that they're using to develop the treatment for ovarian cancer into other types of cancers. So they want to get patents for other types of cancers and they want to spread it more. Part of the reason for that is I think they want to get more interest in the US market. Being a single I suppose focused treatment I suppose makes it hard for the US investor to have a punt on it. But look, I still like the long terms. We're supposed to have a meeting about the capital raising tomorrow morning, so I'll be pretty well briefed if I was on tomorrow night, but unfortunately I'm on tonight.
I think the price of the market tells us all we need to know.
Yeah,
about it,
exactly.
really,
a lot of people probably exit to take advantage of their rights, but why would you do that at 9 cents when you can pick up the stock at cheaper rates? But look, if you're a holder, I'm still a holder. I believe in the long-term prospects of it. Yes, Ian Fraser's stepping down, but they've still got a lot of good people around there. Marty Rogers is still on the board. I think a lot of interest has gone out of the stock because he spent a lot of his time going around talking to corporates and drumming up interest. Whereas the new CEO, his name slips my mind now, he is more of an operational focus, and I think that's what the company needs at this stage of its development.
Is it underwritten at all, the issue? The capital raising?
Francesco's underwriting it, I believe.
That's right, yeah. Godfather Securities. Everyone will be taking up their entitlement.
Yeah, I don't
or
think
else.
it'll be underwritten. But look, I just think that the process, the science behind it. I'm not a scientist, but the people behind it, I'd back.
Okay. All right. Well, let's go to our first email for tonight. And Matthew asks, I'd like to know if the panel believes that Silver Lake below $2, Regis below $4 and Northern Star below $1 represent good value buys, or is there more downside in these share prices of these companies? Interesting question, actually, because we did touch on that a bit earlier. Silver Lake, Regis and, well...
They're three good ones. And
three good stocks, yes.
And there's nothing wrong with the companies. Problem is that they're producing gold and gold's out of favour. And, the market has got an element that, is all about fashion, and you've got to have the right coloured clothes at the right time sometimes, and gold's not the colour this season. And so those companies are three of the better ones. They are ones you would buy. It does not give you no protection whatsoever that their shares won't continue to go down if the lack of appeal and lack of buying interest in gold stocks continues.
But to a certain extent, gold is a commodity like all the other commodities out there. And when you look at the fundamentals of these stocks, like Silver Lake with the resource base that it's got, it's digging it up. It's its cost base is not, it's not a high cost base producer.
No.
There's still a substantial margin between what it's producing it at and what it's going to sell it at.
Yeah.
Again, the question pops up: is it a value trap or is it cheap? And to my way of thinking, it's a bit like what we've been seeing in iron ore stocks.
Yep.
Everyone's saying iron ore should be trading at $90, but it's actually trading at $130, and iron ore stocks are being valued as if they are trading at $90.
The only difference, and it comes back to the commodity, is there's no industrial use for gold. And the industrial uses for iron ore, copper, lead, tin, zinc, you can equate that to the China growth story. Gold is a supply-demand issue, and one of the things that was reported on today was SocGen changing their view on where it's going, an ETF selling down 6%, And the supply and demand is the key and only real drivers of what goes on with gold. We know ETF buying, central bank buying or selling has a material influence, but I'm not going to argue necessarily with Warren Buffett, who believes that a non-income producing commodity like gold has risks to it, and that's sort of where it lies at the moment, and why I think these stocks will have potentially some more downside for the next little while.
Okay, your thought, Francesco, on these three stocks: Silver Lake, Regis, and Northern Star.
Northern Star I don't know a lot about, but Regis and Silver Lake, yeah, like you said, reasonably low cost producers. Gold price still sitting above $1,500 an ounce. They're profitable, but I agree with what Jeremy's just said. I know Jeremy. What Jeremy just said about flavour of the month, and a good example of that is you see the gold price go up one day. The gold. The share prices of the gold miners, only slightly go up, and then when the gold price comes back, the miners fall quite heavily. So I think that patience is not being
well, it's sort of almost beggars the question if there is that value there in the in the sector. Are we going to see a period of M&A activity?
Yeah.
I mean, because if you can buy something, that's conceivably worth $1 at 80 cents.
Yep.
That's what we're effectively we're talking about.
Troy launched a bid for Azimuth.
Yep. Saw that.
So that's happened. Quite possibly get together, at least sharing a cost base too, and that'll be part of that. That's proactive management. I think when the tide's difficult, if you can get together and when things improve. But the question you asked, I don't know if I've answered. Is there a value trap? These are pretty good gold stocks. If the gold price just consolidates, as opposed to my fear that it won't, these stocks could go up quite a bit.
Well, that's what I'm
but
thinking.
You need a trigger. You need a trigger.
You need a trigger, and that's the gold price staying above 1550.
Yeah, that's it, and it could be that. I just have concerns that it could continue to decline.
Okay. All right. Well, that's going to be an interesting one that we're going to have to keep watching. Our next call is from Brisbane. Frank, welcome to the program.
Yeah, thank you for taking my call.
Happy to.
Just want to ask a quick question on NRT. Francesco is interested in Prima Biomed, but wouldn't he be excited about the news NRT came out with today about their results from their cancer trial drugs?
Well, good question.
Frank, I didn't see the results, so you can fill me in a bit on that if you like.
Well, not exactly, but they've had good results for the drugs that they're bringing out at the moment for fighting cancer, and in later stage of cancer drugs. It's still early stage in their trial process, but the results they posted this morning seemed pretty good, and the market seemed to like it.
Yeah, look, when companies like this are putting out announcements and regularly, I mean, you go back 12 months ago, 18 months ago, when Prima Biomed was putting out quite good results, the share price reacted, and there was a lot of opportunity to trade the stock. Now that it's got a bit quiet because they've got into a phase where it takes a long time to get the results, people become impatient, just like the gold stocks, and become a bit bored and look for other opportunities where there's movement in some of these speculative stocks. Look, if they're putting out good results and it's only early, I mean that is promising. I'd have to say, before I can give a real good value opinion on it, I'd have to have a closer look at the stock and the things I look for in a lot of these stocks. The key is the people. I think 100% the key is the people. Secondly, I look to see how much money they got in the bank and whether they can get through certain phases of their trials with funding. So if they're successful, the stock will enable them to actually raise more money to get to that next phase. So those are the sort of things I'll be looking at. But look, Frank, I'll have a closer look at NRT.
You seen anything on Novagen?
I did see that today. I don't know. I mean, I know this company a little bit from way back. It's had a disappointing few years. Good results today. Doesn't help. It's not a bad thing to go around and do a few broker tours, which they did today, on the back and selling the news aggressively. But Frank, looked like very good news in terms of the outcomes. Hard to quantify. This is the thing. But the share price reaction's great. A nice positive one, and hopefully there's more in store for Novagen.
You touched on an interesting point there about these biotechs, how important management is.
Well, not necessarily management's a key, but the scientists, what they've done in the past, and obviously there's some that'll be new to the field and may discover something for the first time. But Prima Biomed that Ben mentioned earlier about Ian Fraser, he was one of the founders of Gardasil, so he's got a background in that ovarian cancer area.
Well, I just wanted to try and extrapolate from that to look at the ANZ example today, because we had the guy that is responsible, and there's a big jump from Novagen to ANZ, but the guy that has been responsible for driving the ANZ expansion in Asia has jumped ship to go and work for National Bank of Abu Dhabi. And it's been interesting because Asia has been producing, they produced 20% of earnings for ANZ last year, up from 8% to 20%, and it looks like ANZ wants to generate at least 30% of its earnings from Asia by 2017. So it's not an insignificant part of the business. Do you think you think that this change is going to be a set? I mean, Mike Smith, who's the CEO, has plenty of experience in this type of Asian strategy. But how much of an impact is it going to have in ANZ trying to keep pushing this strategy out, losing a key man like that?
It will impact, I think, Kim. I mean, may not be in dollars that you could quantify in hundreds of millions or anything like that, but Mike Smith is right near the end of his tenure. He's extended it out twice, actually. So, he won't be there in 3 years' time. So you're losing the key man, your CEO, your head of region. That's going to impact. So, but presumably, and this is the hard thing we don't know really, is how many other people have got skills that they can bring to the equation, and presuming that in a bank the size of ANZ and the divisions they're talking about, they will have. But
well, that's always the problem that we've had with Australian banks. You'll have to agree with that. Every time that they go overseas, they end up blowing both their feet off, don't they?
Particularly NAB.
Well, I mean, this is a fairly aggressive strategy that ANZ's pursuing. So, what?
And look, the people they had behind it were very successful in that area. I mean, Mike Smith's got a lot of extensive experience in Asia, and that's why he's been successful in driving that growth in Asia. I think a lot of it, you're always going to get that impact of the negative reaction initially, but I think now it's a wait and see who they're going to replace him with. Mike Smith's background with Asia, I'm sure he'd have a lot of people he'd have a list of people that he'd be on the phone to right now.
Yeah, no, it's an interesting one because that succession plan is vital if you're trying to drive earnings. Particularly when you're faced with a domestic market where there doesn't seem to be a hell of a lot of top line earnings growth.
Yeah, a couple of comments from Smith was he was hoping to pick up a bit of low-flying fruit after the European issues. Some of the European banks own Asian businesses, and hoping to pick up something there. But that may extend a bit longer, so he still might get lucky in that respect.
The CEO of Lucky Bank in Cyprus is probably looking for a job. Might get an application from him.
Yeah. I'm sure his resume isn't as impressive as some of the others.
All right, we'll take our next caller, who's Joanne from Sydney. Welcome to the program, Joanne.
Hello.
Hello, Joanne. Welcome to the program.
Yeah, hi. How are you?
Very well, thanks. Fire away.
I bought into Magellan on the upswing, and I've just been noticing it's going further and further down every day. Then it goes up, and it goes down again. I'm just wondering what your opinion is on whether to hold or whether to jump ship.
Okay, good question, because this has been a stellar performer. You've been watching it fairly closely, haven't you, Jim?
Yeah.
What are your thoughts? And I think it's probably still got more to go, and they've had a reconstruction, so that usually throws a few people in terms of trying to work out where the stock should be.
Yeah, that's right. One of the things about the funds management company is they've got pretty much a fixed cost base, or only marginal increase in the cost base when they get new funds under management. Now, they got a massive €3 billion mandate out of London, which has changed the metrics of the business totally. On the back of very good performance from their infrastructure and global funds, Magellan are trading now on about 40-odd times earnings. So they're fundamentally expensive, but there will be very good earnings growth, because when that money, which has only just arrived a month ago, is begun to get not only base fees but potentially performance fees on, I think you'll see the earnings grow quite rapidly. They're on the platforms in Australia, and the very strong dynamic that we like to invest with, which is the growth in funds in super. in Australia will benefit Magellan, and they will be one of the names at the top of the list for most financial planners who are recommending that their clients go into various kinds of unit trusts. So Magellan actually will do well. Its share price run, though, is probably the risk a little bit, Joanne, and I think you'd want to have that longer term focus as an owner of the stock because it has run up, but over time I expect that to continue to improve.
Where's your target on the stock?
I think if you look at it now, I think it'll probably spend a bit of time trading between mid-6, so 650 and 750, and I think ultimately it'll probably be a $9 and $10 stock. But it might take a few years to get there, Kim.
Yeah, no, I think you're probably right.
Yeah, look, I agree. A couple of key areas with funds managers, though, is the people. Yeah. And some very, very good people in Magellan.
Ex-UBS.
Ex-UBS, places like that. So, and they've got a good track record now. They've been operating for a little while now, and obviously winning that mandate in the UK is a reflection of that. The other thing to add to that is that mandate they won in the UK, you tend to get a bit of follow-on money coming in from that as well, so you're going to get some significant growth. And as Jeremy suggested, you've got a fairly fixed cost base, so any extra funds that are coming in, any extra mandate that's coming in is just going to the top, to the top line. So I think it's a good company. Our analyst has been following the stock for 12, 18 months and been pushing us, on it. We were a bit apprehensive at first, but we've been good followers of it. He seems to think, it's a $10 stock. If things fall into play, and as you mentioned, it looks expensive at the moment, but you get that growth, that thought that it looks expensive erodes quite quickly.
Well, Hamish Douglas must be one of the most underpaid fund managers in Australia because he's only got
plenty of stock though.
I'm sure it will. A nice easy kick, though. But that's the key with those funds managers is you've got to have those people staying. If you have people walk out, then it all falls apart.
Low cost base.
Low cost base,
incentive for making it work. All right, it's time for a quick break, but before that, though, it's time to start the Stock Watch again. And Jeremy, what have you watched in your time starts now?
I'm watching Toll Holdings, the code is TOL. One of the things that we're looking for is Asian-facing industrial businesses. And we're also looking for companies who have addressed their cost base while the times were difficult and have cyclical uptick in earnings. And under Brian Kruger, the new CEO of Toll Holdings, they've done just that. Their half-yearly report in February was very good, confirmed that Toll is back in town, pays a very nice dividend, about 4.7% fully franked, $5.80, our target is $7.20.
Welcome back to the program. If you've just joined us, Jeremy's Stock Watch was Toll Holdings, and we're going to have a slight diversion from talking about Toll Holdings because let's just recap on a couple of your other stock recommendations, which have been firstly Soul Patts and JB Hi-Fi. Give us a quick recap on how those two are going.
Well, Soul Patts, I think, recommended last time. That had a bit of a run this week, but they had their half-yearly 2 weeks ago. That was pretty good, particularly the brickwork side of things. They got a bit hot this week. There was some suggestion that Motley Fool was recommending them. They moved up a fair bit yesterday, but the bottom line is they've got management which supports it at every opportunity and buys stock in the company they've already got bucket loads of because they just believe in the long-term value. It's a terrific long-term company. JB Hi-Fi, look, that's been fantastic. I pulled that back to a hold really at this stage, and I don't think I'd be buying it at the moment at currently mid-$15 range, but around about $17 it'll probably be worth moving out of, I think. But that's had an outstanding quarter to date and has gone beyond what we thought it would get to. So very good, but it's almost fully priced.
And to recap, the price target on Tulse, what, 750?
Yeah, 720 to 750 is the range.
All right.
Yeah.
We'll keep an eye on that. If you'd like to get in on the conversation, we're starting to run out of time, but nevertheless, do call us on 1300 30 34 35 or email us at yourmoney@skynews.com.au. Joe's our next caller from Sydney. Welcome to the program, Joe.
Hello, how are you?
Very well, yourself?
Look, I held Atlas Iron a couple of years ago and then I sold them.
Yep.
Well, I was thinking of buying them again. What's your opinion on them?
Bloody good question, actually. Atlas
That's a great answer.
Yeah. What's our opinion? Well, how long's a piece of string? First of all, what do you think? Atlas Iron?
It's a good producer. It's got a good
cheap
balance sheet. It's good cost of production. It's major commodity, $136 a tonne. It's profitable levels for it. It's experiencing a massive share price retreat, and I think, Joe, this will be a buy. It might go a little bit cheaper, though, at the moment. And you don't want to be the first person to buy it.
Where's your line in the sand to start buying it?
I think, though I'm not a chartist, we use fundamentals, but you don't want to be the first person to buy Atlas Iron on the way down, because there is that catching a falling knife story. The market is often as good an arbiter and judge of these things as I am, but look, I wouldn't be buying it this week, this month. That's sort of, I almost have a time rather than a price process as well when we do this. So I think it'll be probably the time to be looking around this, around dead set in the middle of the year. So another 3 months away roughly. And I think the price will probably be lower than Joe. And I think it'll be...
What would tickle you on the price if you saw it before through?
Low ones,
Low ones?
Yeah, 120. And, don't underestimate the fearful capacity of a market which can swing down as well as up. And it had a good run for a long time. It's now going to overcorrect on the downside and provide some screamingly good opportunities probably. But it's not a business I would disown or stop looking at. It's just that I sense that there'll be a continuation of the current theme and the stock will probably weaken further.
What are Godfather Securities recommending about
the iron
Atlas?
ore market is volatile at the moment, and that's because it's only just recently become a market traded commodity. We saw it down at around $89 a tonne back in, I think it was August last year, rallied back up above 150, 160 thereabouts. It's starting to pull back. Look, I think iron ore's fair price should trade between $100 and $120 a tonne. Atlas Iron is still profitable, very profitable at those levels. It's not as low cost a producer as Rio Tinto and BHP, but it's still a very low cost producer. And I think you see the marginal costs of production, particularly the Chinese producers at around $130 a tonne, remove themselves from the market, and then all of a sudden you've got companies like Fortescue and you've got companies like Atlas Iron making reasonably good profits on a more stable iron ore price. But at the moment, with the iron ore price moving around, it's out of favour when it's going down, and you see that in the share price of Atlas, more so than you will in, say, the likes of Rio and Fortescue. But when the iron ore price starts to turn up, you'll see the likes of Atlas. But it'll be a slow turner. You'll see Rio turn first, then Fortescue, and then the smaller producers will move.
Okay. We've got an interesting email from Les, and this will probably hopefully take us through, but Les is talking about the fall in the copper and gold price, and he's wondering whether he should be selling his current shareholdings in Panost or hanging on in hope of a rebound in commodity prices. He's currently sitting on losses. So, copper and gold, I mean, this brings to mind the situation of Sandfire today, which was trading at $5.50. When you look at where Panost is and you look at where Sandfire is, obviously both are, in that territory of a buy and are far, far better stocks to buy than, say, Oz Minerals.
Yep. So,
what are your thoughts? What are your thoughts? I mean, the buy, to my way of thinking, the number of stocks that you should be buying are, they're starting to back up in a row now. As a question of, well, which one goes first?
Yeah, Sandfire looks good, doesn't it? And, price levels are very attractive. So with Pan, they're probably going to keep going down. While the concerning copper price, copper's taken a bit of a hit lately. Copper actually a few years out looks pretty good. You know,
Well, exactly.
There's going to be a real shortfall in a few years out, but it's dealing with the situation right now, and that's where, you know, both could actually decline a little bit. Doesn't mean you won't have a good investment. Just depends how long your investment time frame is. So, but I mean, should you bail on these things? Well, I think, you know, if you hold a good value company, call it Pan or any other stock, and its price is going down, but it's got a good long-term story, hold it for the long term. You know, as long as it's not excessive in your portfolio.
You can have the last say tonight, mate.
Oh, thank you very much. Do I get it?
The Godfather always has the last say.
I will go back to the underlying
Well, do you want that
commodity.
to just be goodbye?
No, goodbye. No, Panos as a whole, I wouldn't be jumping into it, you know, too quickly. But you look at the underlying commodity of copper, and you know, really, it's held up. You know, long term. If you look at that long term price, it's still very, very high compared to historical prices. So, you know, these companies are still making good money. It's just a matter of, you know, going in and out of favour. And at the moment, copper's out of favour. But I'd be, you know, do you want to go on the other side of the coin? You're trying to cut me off, aren't you?
I am. Again, because I've been told.
Be contrarian and maybe not.
I've been told that that's all we've got time for today. So thanks very much to our guests, Jeremy Hook from TMS Capital and Francesco D'Estrades from Organet. And to you, all our viewers, for all your calls and emails, thank you. Until next time, I'm Kim Slater from Kimber Capital. Have a great night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.